So today we'll talk about a stock that I believe could deliver a return of more than 260%. I'm invested in it, I bought it at $10.15, and as I will explain, I think it could easily reach $43 if not higher. Now before we begin, as always, nothing in this video is investment advice, okay? And with that said, let's get started. You see, something interesting that happens in the world of stock investing is that most people want to invest in super popular names, like Tesla or Google. For most people, investing in well-known companies means investing in something familiar, and therefore it is perceived as safer. The problem is that popular companies usually are already too big, and the big returns have already been made by those who got in early. The truth is that for retail investors, what's usually left are the crumbs. That's why when I search for potential investments, I always try to avoid names I've already heard of, and instead focus on companies that are completely under the radar. This way, I can get in early and build my position while the stock is still cheap, in order to capture the full upside. In any case, with that said, today's stock is a forgotten pharma company trading at ridiculous multiples. And honestly, I bet you've never heard of this name. Actually, let me correct myself, because you might have heard of this company before. That's because back in 2017, it became quite well known due to its involvement in an opioid-related scandal. Not joking. However, since then, this company changed its name in an attempt to distance itself from this controversy. So in reality, you probably wouldn't recognize it. But wait, am I really investing in a company that was involved in an opioid scandal? Well, yes. But isn't that dangerous? Well, it depends. In this case, no, in my opinion, as you're about to see. The key thing to understand is this: if we truly want phenomenal gains in the stock market, we have to go where others don't want to go. In other words, deep value investing often means looking in the trash bin. So yeah, today's company was involved in an opioid scandal. That's true. But you know what? It gets even worse. Because you see, this company tried to restructure, and it actually succeeded with a new drug. However, the party soon came to an end when a competitor came in, crushing the new product, which accounted for most of this company's revenue. So yeah, today's company really got hit hard. So hard that almost nobody wants to even consider touching the stock today. And that's exactly why it is super cheap. I mean, today's company has an enterprise value of just $23 million. That's basically what you would pay to buy the entire company in the end. Meanwhile, do you know how much revenue this company is generating? $138 million. That means that this company is being valued at less than 20% of its revenue. Now, I don't know about you, but to me, that looks insanely cheap. Additionally, do you know how much free cash flow this company is generating per year? 13 million. That means that today's company is trading at a ridiculous multiple of only 2 times free cash flow. I mean, where else can I get this kind of deal, right? In any case, that's the company we'll be talking about today. Now, before I reveal its name, let me explain how it operates. You see, today's company operates as a specialty pharma company, buying already approved drugs and scaling them commercially. And I really love this kind of business, because you see, you don't need to take huge risks by spending millions and millions of dollars on research and development on something that just might not work. No, here you simply look for good deals, for good products, good drugs, and then commercialize them using your existing sales infrastructure without needing massive investments. And that's exactly why today's company generates so much cash. But okay, what's this company's name after all, right? So before the big reveal, don't forget to hit the like button. And now that you've done your part, it is time for me to do mine. So, this company is called Assertio Holdings, and it is listed on Nasdaq, ticker ASRT. And as I've said, I'm invested in this stock with an average price of $10.15, and as I will explain soon, I believe it could reach $43 or even higher. Before we discuss that though, let's first better understand the scandals and downturns this company has gone through. That's essential for you guys to understand why the stock is trading at such low valuation levels. So after all, what is the story about Assertio Holdings being involved in an opioid scandal? Well, Yeah, it is true. In 2017, Assertio, at the time called Depomed, was accused of irregularly promoting its drugs Lazanda and Nucynta, which were based on powerful opioids. And that was huge at the time. And well, as you can imagine, the market didn't like this, with Assertio stock dropping 33% the day after the news came out. In fact, Assertio stock imploded 97%, falling from $620 per share in August 27 to just $13 in 2022, which is when the company started to recover. So yeah, Assertio, back then Depomed, really got hit hard. It was a really difficult time for the company. So difficult that in 2018, Depomed, hunted by the scandal, decided to change its name to Assertio Therapeutics in an attempt to avoid associations with the scandal. Now please notice that the company changed its name to Assertio Therapeutics, while today's stock is called Assertio Holdings. This might not seem like a big deal, but it is a crucial detail, as you will see later. In any case, this lawsuit kept hanging over Assertio Holdings for years, always representing a huge risk and scaring away investors. After all, massive fines could have been imposed. However, as you will understand, the risks related to these scandals are now in the past. In any case, after the opioid scandal, Depomed, now Assertio Therapeutics, tried to reinvent itself. And success came again, this time with the drug Indocin, which in 2022 generated $100 million in revenue, as we can see here. That's why Assertio stock recovered a little back then, going from around $13 to over $100. However, Indocin had no patent. The only protection Assertio Holdings had was that they were the only company able to produce indomethacin suppositories, which is what Indocin is. However, Indocin's large profits ended up attracting competitors, who finally entered the market in 2023, ending Assertio's party. And again, as you can imagine, investors didn't react well when they saw competition arriving. As we can see here, Assertio's stock collapsed again, going from $100 per share to as low as $8. So, another 90% drop. In the end, Indocin's revenue fell from $100 million to about only $26 million by the end of 2024. And that's how everyone concluded Assertio was done. But they were wrong. Because at the same time competition was entering the market in 2023, Assertio was making an investment that would save its future. Now, before we cover that story, if you are enjoying this video, let me invite you to subscribe to this channel. Here we talk about stocks and portfolio management. In any case, Assertio found a way to reinvent itself. And I say that because in 2023, they made a major acquisition. They acquired Spectrum Pharmaceuticals, which came with a new drug called Rolvedon, used in cancer treatment. And since then, revenue from this medication has gone from $18 million in 2023 to $83 million over the last 12 months. So if on one hand Indocin has already fallen as much as it possibly could, on the other, we should now start to see Rolvedon's growth showing up in Assertio's financials. So in other words, Assertio is recovering, and this will soon become obvious in the numbers. Now, what do you think will happen when investors realize that instead of dying, this company is actually growing, generating cash, and is financially healthy? I mean, do you really think this stock will keep being left behind like this, trading at only 0.2 times enterprise value to sales and 2 times enterprise value to free cash flow? Well, I don't think so. That's why I decided to invest in Assertio Holdings. Now, how could the stock go from around $12 today to $43? So that's exactly what we are going to talk about now, before we discuss what happened to the opioid scandal risk. So here's how I think about Assertio Holdings valuation. First, let's talk about where this company's numbers could go. Well, so as I said, Indocin has basically disappeared, so it shouldn't drag Assertio's revenue down anymore. On the other hand, Rolvedon should start driving Assertio's revenue growth. And from what I understand, Rolvedon could eventually deliver $100 million in revenue, maybe even more, maybe 150 or even 200 million. Today though, as we've seen, Rolvedon is generating around 80 million in revenue. In any case, over the last 12 months, Assertio's revenue stands at roughly 137 million, as we can see here. Now, would you say it is impossible for Assertio Holdings to reach 150 million in revenue over the next few years? Well, in my opinion, that's totally achievable. 100% achievable. Now let's move to the second part of our quick valuation of Assertio Holdings. So as we've seen, this company is currently trading at an enterprise value to sales multiple of just 0.2 times. Now, do you know what the industry average is? Well, the last time I checked, about 2 months ago, the pharmaceutical average for this multiple was around 2.2 times. So if Assertio delivered 150 million in revenue and traded below the industry average, for example, at an enterprise value to sales multiple of just 1.5 times, well then, according to my calculations, Assertio's market cap would need to reach 280 million. That would take Assertio stock to roughly $43, which in turn would represent an upside of about 260% from the current levels. So that's how I think we could see that kind of upside here. But okay, to close this video, after all, what happened to the risk from the opioid scandals? So in short, Assertio Holdings fully resolved this in 2025 with a 3.6 million settlement. However, there were still a few hundred opioid-related lawsuits under the company. The remaining lawsuits, though, were under Assertio Therapeutics. And let's recall that today we've discussed Assertio Holdings. So, what did Assertio Holdings do? It transferred Assertio Therapeutics to a litigation-focused entity, specialized in resolving cases like this. And with that, the risk from these lawsuits is no longer with Assertio Holdings. So to wrap up today's video, here's what we have right now. A healthy pharmaceutical company with no debt on its balance sheet, with no major legal risks, that's generating cash, and with a new flagship product that is growing a lot. And yet, this stock is trading at almost a negative enterprise value. So that's why I believe it's only a matter of time before we see a major repricing of the stock. And this is the stock I bought that everyone else is ignoring, including you, I bet. With that said, that's it for today, and see you next time.